My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
Hey kids, welcome back. Today my special guest zooming in from Boston. We've got Dave Seymour. Dave is originally from the other side of the pond, so he's got a kind of an interesting accent, which I couldn't put my thumb on right away. And he is very, very experienced in the multifamily investing space. Been investing for a long time, helping other people get involved in investing. So they're actively doing it and training other people how to do it as well. So Dave, welcome to the show. Great to have you.
Hey, Dave. Thank you, man. It's great to be on here with you. I appreciate you. And you got a funny accent too, by the way.
I did. Well, Canadian, our accents are messed right up. So Dave, zoom out for a second. Give me a little idea. Freedom Venture, what do you guys do? What's your specialty? What's the sauce? What's the portfolio look like? Where do you buy the $5? All that good stuff.
Yeah. I'll try and give you all of that in a short, succinct manner. It's not my forte, but I'll do the best I can. Yeah, private equity. I mean, that's it. That's the banner of what we do. How can you velocitize capital outside of Wall Street's constraints? Alternative investments is a really broad spectrum. We dial into commercial real estate primarily. We've spent a lot of time in the multifamily ground up and repositioning space. Southwest Florida, we still like that market. There's still pockets of good deals there, as long as you've got good feet on the street. But we're Delta pickers, man. I mean, that's it. At the end of the day, I'm agnostic. If I can find good Delta in a piece of commercial retail. We just did a really nice deal with another group on a repositioning, special circumstances, if you will, that made that retail transaction worthwhile. And we're in the middle of finalizing our numbers for what's called flex space. Flex space is, you've got the storefront in the front, but they're kind of doing some kind of manufacturing or something like that in the back. So Delta, we like that. We like to hunt and pick. When we pro forma out any kind of investment, we're looking at a 2 to 3 equity multiple with conservative underwriting. But as you know, as soon as you finish your pro forma, it's wrong. So we all do the very, very best we can, with the information that we have. So that's pretty much what we get into.
So Dave, when you and the guys get involved in a deal, do you go in as co-GPs? Are you the sponsors? Where do you fit in the initial side?
Yeah, you know what? That co-GP phraseology, I like that. I'm glad you brought that up. Co-GP was created for fearful capital raisers. Mm-hmm. There you go. Let that sink in, right? Co-GP was created for fearful capital raisers. My experience has been that, the co-GP system, in the sense of somebody wasn't confident enough in their deal. It's almost a form of like, oh, come on, please. I'll let you get some of my side of the equation as well as some of your side. Please give me money.
Well, so it's usually somebody who can't take down the deal by themselves. They need to get.
I agree with you there, but legally a co-GP also has to be an extensive participant in the deal.
Yeah.
And most of the co-GP pitches that I've had pitched to me, they're not. Yeah, so, that tells me you don't know what you're doing. There's a thing over here called the SEC, the Securities and Exchange Commission, and you better be compliant with the way you put your deal flow out. So, if I'm raising $5 million, I'm raising $5 million in an LP position, standard operating. We'll do anywhere from a 70-30, 80-20 on the waterfall. They can, they're obviously participating in upside. We don't get super creative with these dynamic waterfalls and benchmarks. We looked at it. I've got the team that can, manipulate and massage numbers on a pro forma that makes my eye bleed. But if I found the very best way to raise capital for a commercial real estate transaction like this is to get them on board with what the asset is, what we intend to do with it, and show them the fundamentals. And if a deal makes sense, they'll do it. It's the old adage I've found. If it's a confused mind, it tends to say no, or it doesn't ask the right questions. So we like to keep it pretty streamlined and pretty clean. So that's how we do our business.
Okay, very good. So what does the portfolio currently consist of these days as of September
Yeah,
2025?
we've got land, we've got multifamily assets. We're looking at some sober housing that we might be taking down soon. So we keep our wheelhouse tight. The piece of retail, like I explained to you, that was a $14 million acquisition that we took down. Yeah, kind of a cool story. The Finemark Bank. So there were three pieces of real estate in this one asset component, if you will. There was a piece of land. There was the strip mall or the retail piece, and then there was an individual building on the end. And one of the tenants in the retail piece was Finemark Bank. Finemark Bank says we're getting out of our lease with you, which is opportunity because now you can lease up. But what they then said is we're buying the building on the end. So you break off that piece, you make a profit acquisition on the piece with the bank that was already in that mall area. And now the piece of land on the end, real cool. Another developer was coming in there and they were building, I think it was 120 or 130 high-end residential for rent units. So you're building your own supply and demand community right there. And then making sure that the retail piece was internet resistant, right? So we don't want Bezos coming in and taking all of our clients because people want something in 2 hours and they want it flown in with a drone. You know what I mean? So
what kind of businesses make up the mix?
So look, the high end hair salon. So if I've got the masseuse, the bank, what else do we have in there? There's a couple of other businesses in there that made sense. I can't remember.
Those kind of
anyway,
type businesses.
Yeah, service type. Oh, there was a kitchen cabinet company that wanted a nice front door. So when you think about the front door of a high-end kitchen cabinet, well, where's my clients? Oh, they live right next door in the 150. If they're going in to buy something or they want to rehab something. So you start thinking of the ecosystem in which you're investing in, and can it find some velocity and fulfillment in itself? I like those kinds of deals. Again, we're delta pickers. We want to make sure there's delta for the investors.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
So what do you guys do differently than some of the other private equity firms?
Nothing. No.
You think it's different?
No, look, that question's such a great question. And it's an opportunity for the respondent on the other end of the question to come up with some dynamic line of BS that really is a dynamic. Let's be honest, man. Listen, watch this. Ladies and gentlemen, boys and girls, real estate is 5th grade math. And if you can do it correctly, you can do very, very well in real estate. It really is at the end of the day. Can you get some nuance? Can you have some sass in there? Can you have like the
maybe that's what I'm asking. I've heard the sass, so
I was talking about software that acts as a service, not my SaaS.
let's talk about your SaaS, man.
Look, I'm. You know what it is, man. I've been around this business long enough to get to a point where other people's opinions are being none of my business. I walk in grace. You know what I mean?
Yeah.
One of my mentors, real early on, Dave, said to me, if you could put people first and profit second, you do really well in this business. And let's just be honest. There's a lot of sharks. We went through it from 2020 through the COVID chaos. Everybody was out there swinging for the trees. They were buying at 2.5, 3 cap assets when they really should trade at a 6 or a 7. And whoa, Nelly, can we get some common sense back into this?
Yeah. So did that kind of bite you guys at all? That all that craziness was going on?
No, I mean we took some challenges with the interest rate hikes. Full transparency. When you're in an expensive commercial construction loan, you better move. You better move fast. But when you're building, man, stuff goes sideways. I don't care who you are. It's like I said, as soon as your pro forma is finished, it's wrong. So where we did not get hurt was the ridiculous pro forma projections or rent increases. And I was looking at deals that were kicking around the market, brother, and they were predatory, man. You know, people are putting out, you know, they can show data of the last 18 months that it was a 7 to 10% rent increase. And then they take the pro forma and they run that out at 10 years at the same number. And an uneducated investor looks at that and goes, whoa, I'm going to, 6 times my money in 3 years? Yes. How much do you want?
Yeah.
And, the market will.
Well, now the piper is being paid.
Yeah. Yeah. And that goes to what we were discussing prior to recording, was the fact that there's so much distressed paper coming down based off of these bad pro formas.
Well, explain that to us if you would, Dave. So what do you see? Because what I'm hearing is there's opportunities coming down the pipeline. What are those opportunities looking like to you? And
look, the distressed bank assets. They're also still the mom and pop owner operator assets that have been hanging on by the skin of their teeth. So on the larger scale, these banks have restructured these loans or rewritten these loans. You got to remember, when a loan gets written, somebody gets paid. Loan origination is a business all in of itself. And the money behind those loans very rarely knows where it's going, right? It's in some kind of fund structure, Blackstone, some of the big boys. So when you begin to see that trickle down effect, and some of this paper has been bought and sold so many times, and now it comes into the market, and if you can find a good paper broker, if you can find a good relationship with an institution that says, we're screwed, we got to get this stuff out of here, that's a buying opportunity. And as
you're starting to see that kind of stuff happening?
Oh, yeah. I mean, look, it depends on where you go for your data and your information, right? You can always lean data in any direction if you try hard enough. But conservatively, we're getting anywhere between 1.2 and 1.5 trillion with a T of commercial real estate assets, multifamily primarily, looking at some kind of stressor that needs either a workout or a straight sale, or there's a lot of stuff going on. Now, I wish I had $1.2 trillion in my back pocket, because I'd buy it all and manage it and figure it out. What we decided to do, because of the opportunity in front of us, was to kind of build a team, if you will. How do you build an army? Which is why we started teaching the other people.
Yeah, tell. We're talking a little bit off camera about that. Yeah. That's fascinating. Tell me about that.
Yeah, look, the brand, the education brand, because you've got to brand everything, is called Legacy Alliance, right? How do you leave a legacy? We primarily work with, corporate individuals. Let's say 150 to 250, 300 and above is a salary position for them. Mm-hmm. And when we start to educate and show the corporate professional, even the doctors, the lawyers, dentists, chiropractors, those kinds of high net worth professions, when you start to show them the true value of their retirement planning, it gets pretty egregious, because people know about compounding returns, right? We all say compounding returns, leave the money, let it run, baby. Well, Charles Schwab, follow the green line with fidelity, don't you dare deviate, all of that stupidity. There's some more of that sass. But when you dive a little deeper and you start to look at what a compounding cost does to a compounding return, compounding fee, which is cost, right? And it starts. Hey, I get a 9% on my statement. I'm kicking butt and taking names. Well, you got 9% for that month. Number one, that wasn't the full year. And then number two, does the financial data at the bottom, i.e., the money in the account, does that correlate to a 9% return? And very rarely it doesn't. It doesn't, because they don't calculate, the fee structure and compounding costs. So anyway, get off the soapbox, David, get back onto the call. So what we do is we do a lot of education around that, about retirement planning. And then we show them the value of a 1031 exchange, the value of solo Ks. All right, a solo K is a fantastic investment vehicle on stateside, where a business owner can put aside anywhere up to $140,000 as a family unit, non-taxable. Anytime you can keep the tax man at bay and pay him another day is a good thing. Yeah. So we teach a lot of tax strategies, and then that engrosses and wraps itself around what we call the Legacy Wealth Masterclass, which is an opportunity to hit a webinar, get a foundational understanding, and then it's short money. I think it's like $2,500 or something like that, just so that somebody's got skin in the game. Teach them how this multifamily investment business works, underwriting, opportunities, and then if they like the deals that they find and they're a little skittish on taking them down on their own, then we offer some partnership opportunities with them. So, we've been up and running, we're just ramping up now. We've been up and running 8 months, maybe a year. We're getting great results, a lot of interest. But I'm not in the market to hold anybody's hand. I'm not patting you on the back and saying, Hercules.
Well, I mean, it's smart. I mean, just zooming out from a business perspective, Dave, you're finding your ideal investor avatar.
Yeah.
You're showing them how to do what you guys do.
Yeah. Yeah.
If they want to run out and do it and have their hand held and do a deal with you guys, you'll JV with them. For sure. Most of them don't have time to do all that. There's no way in hell they can do all the stuff you guys do. So I'm guessing a chunk of them are going to say, hey, Dave, let's just partner together. And how about if I invest with you?
Yes, you're absolutely right. So look, I am full transparency that there is a Trojan horse in education from that perspective. Dude, that's way too much work. I don't have the time. Yeah. My wife wants to go to Boca this weekend. I'm not talking to brokers, right? Mm-hmm. But here's the upside for us. Not only is it, a potential investor in our pipeline, but now I've got an educated investor.
Exactly.
And that, my friend, is more valuable than money. It's more valuable than money. We've got a saying or a little bit of a slang that we throw around here at Freedom Venture is, an educated investor always makes a better partner. And they tend to invest more money. You'd be amazed that, maybe you won't. The investor who puts in more money makes less noise than the investor who puts in little money. Absolutely. Because, they're going to hold on. No, let one free so it can come back with 2 or 3. It's okay. You're going to be okay, Yeah. You'll love this. See if you like this. Buddy of mine said to me one time, he said, David, money is like manure. I said, what are you talking about? He goes, if it sits in a pile and doesn't move, it kind of stinks. Yeah. He said, if you sprinkle those suckers around, just sprinkle it around. He said, you'll be amazed at what grows. And I'm like, dude, I love that. And I'm using it. I'm stealing it. And I might even copyright it.
So there you go. Well, that's a good point for us to stop on there, Dave. So if people want to find out more and connect with you, where should they go?
Yeah, look, the education funnel will also bring you to some of our opportunities to invest. So check us out at Legacy Wealth Masterclass, legacywealthmasterclass.com. And, I'm Dave Seymour. You Google my name. All the America's Most Wanted stuff has now gone down on the search. So only the good stuff's up the top. You'll be able to find me. You'll be able to find me.
The only Brit out there with a Bostonian accent. So there you go.
You'll find me. Appreciate you, man. Thank you.
Awesome. Thanks, everybody, for tuning in. We'll see you on the next one.
Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.